welcome. Good afternoon, everybody, again. Here, feels like deja vu, Vin, doesn't it? It's
exactly the same, isn't it?
Exactly the same. I think we're sitting the other way around this time, maybe. Doesn't matter. Always good to change. Vin, technology. It's the world's most interesting sector, isn't it?
Oh,
it's the sector everyone in this audience should be excited about.
Always, yeah, absolutely. It affects every part of your life. I guarantee all of you will have some kind of physical attachment, which is your mobile phone or your iPad or your keyboard, even. So, and everything that's coming through that. So there is just so much going on in this space. It's scary.
So, Vin, it's interesting, isn't it? You've had many successful deals. When you think about what really excites you about the world of technology, it's people, isn't it? It's not just the sort of the underlying technology. It's people's ability, managers' ability to actually develop something.
Yeah, I mean, part of it is, in the end, it's always about people, whatever you do. And if anybody tells you otherwise, don't believe it. You back good people, you follow good people. They might have made the wrong choice in terms of where they first direct their energy, but later on, they're able to move and transition on to something that's much more sensible and move forward. But also, I think you have to be very careful about the kind of technology you're after. There are some things that are so disruptive that you and I would just not seen them coming. Uber a few years back, and you saw the IPO of Lyft, was it yesterday, at 24 billion or something, which is unbelievably crazy. But guess what? It's going to ride up, and that's not a pun.
Good joke there.
Yeah. So, but there is just so much happening in so many areas, and everything that happens around technology seems to be creating further technological advances. So you've got the whole concept of the phone and the data being available to you is now creating a whole massive industry around protection as privacy and security. This disruptive nature of electric vehicles. You wouldn't have thought, where do you think this is going to disrupt the market? There's a massive change going on for the likes of Centrica as they readapt from their core piece of business to looking at how they can power the energy behind electrical vehicles. And yet that's not a step change they would have ever even thought about maybe 10 years ago. And there's just so much going on. So whether it's in cybersecurity or whether it's in electric vehicles or whether it's in disruptive mobile technology or whether it's in big data or whether it's in artificial intelligence or whether it's robotic automation, there is just an immense amount going on, and you really have to stay on top of it. And generally, my view on that is, if you're looking to invest in, look for things that are constantly that are mission critical. There's stuff that you have to do, a company has to do, or an individual has to do, as opposed to would like to do or maybe would wish to do. Where it's a mission critical component of their core business, and in so engaging with it will help them drive their own businesses much, much further.
So let's think about everyone in the audience wanting to invest in technology. They see they feel something is maybe important, maybe changing. What sort of building blocks should they look for? Does it start with good people and a good balance sheet? What are the key metrics, the key factors that you think about, which can be of general applicability to day-to-day investments by the audience?
Okay. Well, it very much depends on which part of the cycle you're investing. So right now, there is just so much going on in the early stage market, i.e. Almost the EIS and SEIS area. And in that case, of course, you're looking for the disruptor and the management team, their ability to transition. At mid-market, you're looking for growth capital type investments where additional funding will allow them to expand on a market opportunity, or and that usually means driving more sales operations, or maybe not so much product development because the product should have been there by now. And at the large end of the marketplace, you're really talking about people who are trying to dominate the market, either through an acquisition play or through the kind of size of market they're in. I mean, in the cybersecurity world, you see that some serious winners in the likes of Palo Alto and Checkpoint, etc., who, once they get to a certain scale, are able to, they may have become the winner in firewall technology and the global winner by a margin mile, but then having got the valuations and the metrics in terms of share price metrics, they're in a position to say, okay, right, so we own this. Now, why can't we own this and this and this and this and start to expand out and take over a much broader territory? So, it really comes down to where you're most excited about investing. And I have to say, I tend to invest a combination of the early stage stuff, quite a lot in the scale up, and actually quite some big stuff as well, just balancing the entire portfolio.
I mean, in terms of some of the big stuff, just starting there, I mean, many in the audience may be investors in some of the big FANG names. You've mentioned the Lyft IPO yesterday. It's all very excitable stuff, despite some volatility in the fourth quarter last year. What's your instinct about the big challenges for sort of the Facebooks and the Alphabets of this world? Is it regulation? Is it the threat of breakup? Is it that they just get too big for their boots and they don't see the new competitors coming? Or are they just flawless businesses that are going to be the cornerstone of people's portfolios for years to come?
I think the biggest issue, there's a point when somebody just gets too big and they just have too much of the information and you start to see abuse of the system and the information that they have. And you've seen it with the issues around democracy and the impact on both local and indeed countrywide elections. And regardless of whether people say they're being influenced or not, they are. And you can see it even now with what's happening with Brexit. If you look at the social media piece, you'll see an awful lot of noise around either vote, drive the Brexit through or, look for another referendum, but influencing both sides. The challenge for Facebook is, and in fact the Googles of the world, is they have got too big and too powerful, and I guarantee that over the next 3 to 5 years there's going to be a hellishly more regulation surrounding what they do, and I think it's probably warranted. You've noticed that the Europeans in particular have started to play this really quite aggressively, and I can't see that diminishing now. And it's a bit like what happened in banking in 2007, 2008, when it was a free-for-all for a long time, and then suddenly everybody realised that actually it was quite damaging and actually had a bigger impact than we would have originally anticipated. And guess what? The regulation is almost gone from no regulation to you can't breathe too heavily without somebody wanting to regulate you. And there will be a pullback from that, of course. But I think on the Facebooks and the Googles, it's only just starting. Whether that will actually impact their overall positions in the market, I don't think so. I just think they'll get used to having to deal with regulators on a more everyday basis.
But that sounds to me like a sort of a change. And we've obviously seen in previous technology cycles that some of the big striking growth companies, they mature, they get bigger, the law of large numbers kicks in, it's harder to proportionally grow, and they start to produce things like cash flow and dividends and income. And we look at something like Apple, and surely that's the position they're in. I mean, I'm sure Apple's a share owned by many people in the audience, or their products are used by many people in the audience, you included, Vin, but one assumes that Apple is now an income play rather than a growth play per se.
I think it will become so, yeah. I mean, I think they've got to a stage where actually, I can't tell you what they've done, because all I know is what I can see from the outside is that, and the price positioning on the latest Apple was a turning point, was the fact that they actually had to price it at a certain level, and that caused a stop in the marketplace. You might spend £1,000 on a PC, but are you really going to spend 1,500 quid on a phone? And especially if it's not a dramatic change from where you were historically. So just maybe, for the moment, we may have plateaued out on new pieces around the phone, other than maybe 5G when it comes through. So their move has been more towards apps, and also to look at taking account of their incredible user base of users, what else are the other services that we can offer to you? And that's a classic case of a maturing business. When you've got dramatic growth in front of you, why would you do anything else? You are literally going to follow that curve. When that starts to ease, then you back off a little bit and you start to look at some of the other areas that may be possibilities. And you can see that with their credit card and with their the banking requirement they're doing with Goldman Sachs, etc. So I would expect them to do more and more of that until the next wave of technology takes them into doing something more around the phone. And I don't know how long is it now. Is it 5 years since Steve Jobs passed away?
I think a little bit more.
I think
than
something
that,
like that. And he was the innovator. And whilst you might have had a portfolio of products in the background that would have carried us through this period, there was going to be a point when, the next breed of hyper talent hasn't come through as yet. And you might notice that the Burberry ladies left Apple as well recently. So, which again, there's only so much new innovative stuff they can find at this point.
Which comes back to your earlier point that people are so important, and something from this show generally is go and speak to management teams. Speaking to a management team, it just gives you new insights, doesn't it, as an investor?
Yeah, of course it does. But go armed with proper questions. Don't just say, "Oh, you're a good-looking bloke, I'll come talk to you," kind of thing, or not, as the case may be. Go and actually ask them some proper questions. I mean, and the biggest question you always have to ask is, you might have massive revenue growth, and your EBITDA might look like it's growing fantastically, but where's the cash flow? And in the end, nothing matters unless you see the cash. I mean, I'm an absolute believer that no matter, there's a classic, and I'm not sure if I should say this, but there's a company out at the moment that has been riding phenomenally high for the last 3, 4, 5 years. And all of a sudden there's been two activist type, anti-accounting type questions, and the share price is just pushed all the way back down. And the issue that people have is, what was causing it to ride so high before? Because everybody thought there was this massive momentum investing opportunity, but also, the thing it was doing was clearly quite an interest. It's in ticketing. It's only now that somebody's picked up on the numbers that everybody's going, oh my God, they're spending 40 million quid on R&D. Why are they spending 40 million pounds on R&D for something that should be repeatable? And capitalising all of it. And suddenly the questions are being asked. And you have to ask yourself, why didn't people just ask the question earlier on? Because it wasn't generating any cash. Anyway.
I agree. I mean, cash flow is key, absolutely. I guess the question is, Vin, given that backdrop, given the fact that markets have been quite excitable, you have to ask these questions, more directly, more thoroughly now, don't you? Because people have they've become used to things either being the way they are, technology stocks performing wonderfully, etc. Are you seeing any excesses building up in the system beyond accounting issues at individual firms? Is there a sort of a euphoria moment? You were investing back at the time of the dot-com boom at the tail end of the century into 2000. Are we something akin to that or not?
Yeah, I mean, normally you'd say that, and we've definitely had our 10-year cycle. And you have seen some pullback in technology stocks, certainly from October through to December. So there has been a slicing off of the top elements. If you were investing at the bottom of a cycle, I tend to think that all boats rise with a rising tide. Now you're at the top of the cycle, you absolutely ought to be quite ruthless in what you invest in. Because when it turns, there will be a backlash, And I'm old enough to have seen 3 cycles. So do I believe that there will be a fundamental shift? Yeah, of course there will. Can I tell you when it is? No, because I'll tell you what, I'd be, getting out at that point. But in the end, you have to go back to normality. What is it you always have to do? You have to figure out which businesses you want to invest in. And I tend to invest in things that are mission critical, where there's a high level of recurring revenue, where I can see a massive growth opportunity if the management team execute correctly. Okay, where that even if they screw up, and they do sometimes, the market is growing so phenomenally that somebody else will want to buy them. They'll get taken out because they're just a great value opportunity for some. To create that market, that size of market, that customer base would cost the acquiring company substantially more than the asset itself. And of course, I'm looking for a real return on not just EBITDA, but as a percentage of EBITDA, what is the cash return?
Absolutely. We talked a year ago about Micro Focus.
Yeah.
And it's interesting because Micro Focus is the sort of company which actually, it was criticised because it was perceived some of the acquisitions it had made, some of the assets it had bought from Hewlett-Packard were not working out. A year ago, you called it as an interesting opportunity. The shares have just about doubled since, so kind of Vin's done all right on that one.
I backed it, so
backed it. So
if I tell you something, I back it. I'm not here to tell you something and then not do it myself.
So I guess the thoughts are, number one, Micro Focus, where are we now? Number two, more generally, this sort of self-help phenomena strikes me at this point of the cycle, where a company management team can actually turn around a business organically, can be kind of interesting.
No, absolutely. And in fact, in reality, in the case of Micro Focus, the reality was they bit off a big asset. Everybody knew the asset was quite a challenging one. It's going to take them a slightly bit longer to actually get it to where they wanted to. But they have a different model. Kevin Loosemore, who's the chairman, his commenters, he's not there to show revenue growth. He's there to throw off cash. And so whereas most organisations will spend a lot of money chasing market growth by hiring more and more salespeople and driving the market and putting the marketing strategy in, et cetera, Kevin's view was never that. His view was that I'm going to buy a bunch of assets, I'm going to absolutely make them run and execute beautifully. I'm going to take out all the excess costs. I'm not going to chase the sales process, but I'm going to throw off a lot of cash. And that's what he's done. And to be honest, he's done a fantastic job on it. And catch-22 is they called it, just got the turning slightly wrong. Do I think they'll do better than they are now? Yeah, absolutely. Will I hold on to my shares? Yes. Why? Because the management team don't get fully rewarded until the share price hits £35. You know, that's when the money is really in it for them, and they have pushed and pushed the investors to get to that stage, and they're currently at what, 19, 20?
£20, yeah.
So, do I think there's more to come? Yeah, absolutely. Do I believe and I tend to meet a lot of these management teams, A, because I know them, or B, because I spend a lot of my time networking in these environments. Do I think they're a very capable management team? Absolutely.
China, bit of a game changer. We heard Dr. Johnny Hon speak earlier about the growth of China, the potential of China, fascinating big Chinese tech companies, lots of domestic users. Is it an area the UK investors should be looking at, or should we be more fearful about Chinese technology companies coming here, stripping our data and, I guess, abusing our privacy rights?
There's a bit of both. In case of investing in, everybody talks about China being an emerging market. It's not an emerging market. It's well and truly here, guys. And we're kidding ourselves if we think that they still have to catch up. The fact that China put a gadget on the moon, on the other side of the moon that we haven't been to, or the Americans haven't been to, and we didn't know about it until after they announced it, says an immense amount. I mean, are we kidding ourselves? They're there. So the issue really comes to, and you know, you've only got to look at Alibaba and some of the big plays out there. Technology is at the forefront of what China is doing. I think I'm sure there's always a risk with IP even to this day, but I think they're creating so much of their own that they don't necessarily need to come and get it from us. Privacy issues, absolutely. You have to protect yourself, whether that's from China or whether it's from some rogue individual down the road, or whether it's from another state that we don't want to be involved with. But you have to protect yourself, whatever the scenario. And I don't just mean in terms of your corporates, but you have to absolutely make sure you're protecting your mobile phones, the data that you give out, because people are so. I'm amazed at how much information we give away on ourselves. It's utterly ridiculous, and I'm convinced that we're going to see some massive pushback later on when we suddenly realise just what is out there.
As they say, if the product is free...
The youngsters in particular.
Indeed. I mean, if the product is free, then you are the product.
Yes,
you are the person
that
they are trying to access. 5G, is it a game changer? Or is it more of a building block for other things?
No, I do think it's a game changer. And I think it's a game changer because actually it starts to move a lot of the technology that's still sitting here nascent and just riding around, waiting for the big move in terms of capability. So, 3D imaging of your medical capability across the world on your mobile phone. Things like Babylon and Push Doctor and what's the other one, Livy, will suddenly become much more viable entities. Because why not just take a picture of the issue and have somebody across the world? Why have a GP in the UK deal with it when it could be a medic in India, or indeed in China, or indeed anywhere else? So it's that whole capability of just taking everything to the next level. And in itself will create a whole new market of people saying, okay, we could do X before, but now we can do 3D virtual reality of, X. Why don't we have that on our mobile phone and be able to display that anywhere? So it's just another big leap.
Is it important to understand fully what you're investing in? Because I bet a lot of people are sitting here thinking, okay, I get this. Technology is changing stuff. Focus on cash flow, management teams if possible, think about the big themes. But I guess they worry they're going to be blindsided by sort of not understanding something fully or the implications of it. How do you stop that happening? Is it by focusing on the numbers, on like the outputs like cash and earnings generation, or is it through other means like share prices or something like that?
Okay. A gentleman said it earlier on, and that is if you're a sector expert in one thing, you're doing well. If you're a sector expert in two, you're doing fabulously. How many sectors do you want to be an expert in? So I try and focus on two or three things I absolutely know, and then I back myself in my ability to understand the business, find out as much as I can about the sector, read around it all the time, constantly, and constantly where I can go listen to management teams. It's very interesting because Quindale got mentioned earlier on, didn't it? I remember meeting Mr. Terry because somebody had asked me to go to this meeting, and I listened to him for an hour and 10 minutes. And in the first 30 minutes, God, I thought he was God. He was amazing. I mean, he came across absolutely fantastic. And for some reason, in the second 30 minutes, he was completely out of it. And I realised what was going on was this guy could only hold his own attention and keep his attention focused for that period of 30 minutes. And at the time, his price was riding really high. And it was quite obvious to me that if that's what he was doing in that single-hour meeting, then I couldn't trust him to hold a meeting or hold a team together and really drive an organisation. And there was a very big investor that had asked me to go meet him. And I remember going back to this, big investor. I think he had 18% of it at the time. And I remember saying to this gentleman, you really need to be out of this. You really need to be out of this. And he didn't believe me. He said, no, it's a great business. I said, no, the guy's bipolar. He's got something, there's something going on here, because he's absolutely genius in this instance and not so in the other. Now, I could not have told you that everything else that happened with Quindel, but I could tell from the individual, if and you don't know that unless you spend time in the company of these individuals. And I make it my job to go and spend time with the management teams. If any of you have been to AGMs recently or EGMs, you'll find that none of the shareholders turn up. I mean, massive wide opportunity for you to question every single person on the board, and nobody turns up. I mean, I'm amazed. So you end up with like 12 people sitting up here, and the only people in the audience are the advisors. Yeah. So guys, if you get something wrong, there's only one person to blame.
I mean, I think in today's information world, we are blasted by information, but it provides such opportunities to interpret it, to use it. I mean, when I look back to my relative investing youth, compare it to today in terms of the plentiful range of information, it's wonderful. But as you say, Vin, it's what you do with it that matters.
Yeah, absolutely. I mean, it really comes down to, if you're playing and it's fun chasing a stock, great. That's fine, But if you're seriously into this investing game, not a game, if you're seriously into investing, and a lot of people have taken their SIP money and started to do this, then do yourself a favour. The quickest way to lose money is not to know what you're investing in. And it's much harder to make it. And, I'll buy some gold bullion bars, maybe. Would I go into mining? No, because I might back Peter, for example, Hamrose, and put some money in with them. But to totally go in and understand that market from where I am now is just a long haul. I think the tech industry is as exciting as the commodities industry, but it's a sector I understand. And I feel confident in my ability to pick the stocks because I am confident that I can ask the right questions and know when somebody's pulling the wool over my eyes.
And we're always all learning,
That's what it is.
all the time. The key for an investor, I think, is to be inquisitive and to keep on learning.
Yep.
What happened at Imagine Tech? What happened there? I mean, you saw something and then you didn't like it.
Well, I saw it, and of course you can't get any real data, because I bought some stock, tried to get some information, and couldn't get in. And I kept thinking, there's something here. There's definitely a business here that looks quite interesting. And innovation as a market is quite an interesting play, et cetera, et cetera. And yes, it is. But by the time I'd figured out just how much stuff was sitting off balance sheet and what they had been doing, which you just couldn't see from the numbers, you just couldn't get it out, ripping it out of the numbers. And there were some really credible people attached to it. I kept thinking, I'm missing something here. So I put some money in, managed to have a proper look at it, and then realised, actually, this thing needs to be sold as quickly as possible. And not only does it need to be sold, it's not going to get anything like the value that I thought it might get. And the timescale for resolving it was just not worth the effort for me. And so I put out.
And that's the attribute of a real investor, isn't it? You have to sometimes admit something's changed, and therefore I've got to sell. You may or may not make any money. But the idea is that you could just keep on going, keep on.
Well, it was really hilarious because I watched as more and more money kept going into this thing, and I kept thinking to myself, this is ridiculous. The value that will come out of the business is less than the money that's gone into the shell. So I pulled out, and and I think the gentleman that went in did as best as his job as he could, but you'll know it's sold for next to nothing, and actually the cash in the shell is next to nothing. And an issue with a shell like that is that there's so much history that it's not clean anymore. There's nothing you can really, well, yeah, it's a harder shell to use.
So we've talked about management teams, we've talked about themes.
Sorry, just what the lesson of that is: never fall in love with a deal, or never fall in love with a company. Because the easiest thing in the world was I was so far in, I might as well just carry on. And actually, no, that wasn't the right thing to do. And sometimes it's just hard to say no. Let's get out, and get out with your kudos, as it were, and move on out.
I agree. I think the hardest thing in investment is to admit that you were wrong or something had changed and you have to sell. But that's the sign to me of somebody who's learned that the art of investment is something which is ever changing.
Absolutely. And I think the other thing that I would say is there are some great situations where you're winning big time. And if you are winning big time, one of my colleagues was always really, really good at this. And every time we sold a business, we sold 3 big businesses. I'd say to her, Babs, should we be selling this? Because, God, it's really rocking. Should we be selling this? And she'd say, bank the money.
Yeah.
Just bank the money. You can always start again. And so when you get to that situation where you've got some really great success stories, do the sensible thing. Bank the money you invested, so you're free, and everything else upwards is free.
As John Paul Getty once said, apparently, when asked how to get rich, by selling too soon was his answer.
Yeah,
but anyway, 3 final questions, Vin. Number 1 is, what's the biggest, if we're here in a year's time, if we're lucky enough to be here in a year's time, what's going to be the big theme on everybody's lips in the technology space?
Robotic automation, artificial intelligence.
Okay, that sounds complex and sort of hard to understand. How's it going to sort of impact day-to-day life? Okay,
so the simplest thing about is to think about anything that you do that is repeatable and automatable. So, and I think this is an issue that could affect a lot of industries. So if somebody's sitting taking data off a piece of paper and feeding it into a computer, you don't need somebody to do that. The piece of paper can be scanned, the data can be sucked off it and fed into the appropriate systems just with a small piece of technology. Now, if you look at processing, there's an awful lot of businesses that do just that, whether that's travel agencies, whether that's accounting back office type functions, whether that's anything government related in terms of, in fact, you're seeing it now with a lot of the digitization of government projects. So if you go to DVLA now, you put a lot of data in, it does it all automatically for you. You don't speak to a human being. It's all done automated off a website. And I think you're going to see much, much more of that, and further into the space. So robotic automation sounds really complicated, but it's not. It's literally suck the data off, scan this, suck the data off it, automatically push it into something else, cut out the middle person.
Does that mean a lot of job losses?
Yeah. I keep hearing that artificial intelligence and robotic automation will create a brave new world, and we're going to create different types of jobs. But your issue always is that the people that are doing those jobs may not be your nuclear physicists, and you have to find something that is going to sustain society in the long term. And we're not all going to be PhDs in mathematics or in nuclear engineering, etc. So what is it we're going to replace it with? Part of me feels that we're sleepwalking into this, and we need. It's like it's a bit like Facebook and Google. We all think it's so amazing that we sleepwalk into giving away very valuable data about ourselves. And now we're going to have to struggle to pull some of that back and actually control it a bit. And the risk here is that we are sleepwalking into the whole area of AI and robotic automation.
How do you technology-proof your portfolio? For everybody out there, if you had to have one theme, maybe a stock, or maybe just an idea, a concept, do you have more technology in your portfolios on average or less?
More. I have more technology in the portfolio because I actually see a lot of the issues in the future being dealt with by technology. And there's a great gentleman called Robert Smith, who is the chairperson, managing partner at Vista Private Equity. And I remember a couple of years back, his view was that technology was eating the world. And pretty much every business is trying to find a way to platform itself in a manner that it uses technology and calls itself a technology-enabled business. And by doing so, its immediate valuation increases. And you're seeing a lot of that. But to me, there is more technology will drive the future. And my big themes for technology generally are, the people that provide the shovels and spades, okay, so the distribution type engines. Healthcare. Healthcare is going to be so greatly affected by the further enablement of technology across the piece and big data and and just understanding anonymized data about patient records, etc. There's going to be a big theme down that line over the next 5-10 years. And then cybersecurity. We will have to be more and more cognizant of what is out there and who might try and attack us. Whether it's a spam call on the phone or whether it's, somebody stealing your identification, or whether it's a full-blown cyber attack like WannaCry was a few years back.
So we've heard that, we've seen you've got to focus on stocks and cash, management teams. You should have more technology in portfolios. Everything sounds exciting, but I guess my final question, Vin, is, what should we be most scared about? What is the thing which investors across here should be saying, let me try to avoid doing this? What worries you? What keeps you up at night?
I think we're at the top of the cycle, and but then I've been thinking this I sold my last business in 2015. Sorry, I sold my first business in March 2000. I sold my second one in July 2007. And the third one I sold in March 2015, thinking that we were at the top of the cycle. I think, great, when top of the cycle, I'll come back down and I'll get to the next stage. I missed the top of the cycle. I cannot believe we're still running at where we are. Yet okay, with all the noise, I still feel there's a bit more to run. But there's a point when as the gentleman would have said, it's never a bad time to bank the money.
Absolutely. Wise words to finish. So, Vin Murria, Queen of Tech, thank you very much. Thank you for listening. Lots of interesting stuff.
I think that guy was... Sorry.
I think we've got time for a quick question. Go ahead, sir.
Thank you. Is there any useful indications out of the hype curve? And regarding robotic automation, I think I first started doing projects 20 years ago. How do you time the major push?
I don't know if you can time it, but it's happening right now. You've only got to look at, if you look at Accenture's results, for example, they've had a massive growth spurt around the work they do with this whole robotic automation piece. If you look at the work that Capita are doing, if you look at any of the big service type businesses, where their growth is coming from is helping companies enable RPI in their organizations. And so I don't think it's a case of saying, is the big push. I think it's already started. And where we are on the curve, I can't tell you, but my sense is we're still on the ride up.
I remember Seagull.
Yes.
Which, in a way, promoted in the same way, which eventually sort of faded when it became the sharp and disappeared into the files or whatever. And I do wonder about technologies which are hyped and over-promoted. When the files IT disappearing, because it hasn't been working, it hasn't been
With all due respect, I actually have to say that, and I'm a technologist, isn't that the whole nature of technology cycles? I mean, go back 30 years and we were talking about the 286 and the 386 and the 4X machine, and every year there was a new machine, and it was the best thing that ever happened. And that shows you how really old I am, the fact I know about the 286 and the old... Sorry. Sorry.
Sorry, I go about 50 years.
Oh, do you? Yes. So
experience in investments is always a good thing, believe me.
Absolutely. So, I mean, and you saw Linux, you saw ASPs, I used to think that, when you go through that cycle and you go out of the industry for 3 or 4 months and you think, oh my God, the world's going to have changed, I'm never going to catch up again. And you come back and you realise that actually nothing's changed, it's just a different set of words.
Bring back paper tape, that's what I say.
Sorry?
Bring back paper tape. That's...
Yeah, right.
On that bombshell, I think we'll finish it. Thank you very much.
Thank you.
Thank you.